Well, good day, smart traders. Francois here, senior analyst and trading specialist here at Smart Online Trader. I just want to welcome you to this week's weekly market review. Please ensure to stay till the very end, as I will be sharing my analysis on potential trade setups that you can look out for in the week ahead. So we had a rather interesting week this week, filled with optimism, as the global markets witnessed a surge in prices earlier this week, primarily due to the slowdown in wages and the US CPI data that was released on Thursday. Having a look at our economic calendar, we can see that the release was highly anticipated, with headline inflation year on year coming in at 6.5%. This is down from November's 7.1%. And the core inflation year on year, which strips out volatile food and energy, came in at 5.7%, down from last month's 6%. Easing inflation has encouraged expectations of a slowdown in the upcoming FOMC meeting. The Fed Fund futures are now pricing in a 94.2% chance of a 25 basis point increase and just a 5.8% chance of a 50 basis point hike. We saw gold prices jump to $1,900 an ounce, being a fresh monthly high post CPI results in Friday's session. Meanwhile, the US dollar sank this week to a 9-month low, down 1.7% for the week. And it's finding it difficult to gather recovery momentum, with the next downside target on the dollar index at 101.5, which marks the May 2022 lows. Well, now that we've looked at gold, let's have a look at black gold, aka oil. So Brent crude and W crude oil had a weekly gain of 7.5% and 7.9% respectively. This was despite the fact that the US crude build of 18,961 million barrels for the week ending on January 6. A weakening dollar and the additional curb of the Russian oil supply due to sanctions have helped lift prices. However, much of this optimism was pinned on the top oil importer China and the reopening of its economy after strict COVID-19 rules. Let's finish off this weekly review by looking at stocks. So JP Morgan and the Bank of America were among the first banks to release their financial results this week, with both beating expectations. Now, this was absolutely fantastic, but why did this happen? This was due to higher interest rates boosting income from loans. However, JP Morgan CEO Jamie Dimon warned of economic uncertainty ahead and that the US is likely to tip into a recession. Meanwhile, the S&P 500 edged lower, losing 0.85% for the week. The Dow Jones was down 0.6% and Nasdaq 100 was down 0.85%. I do want to thank you for watching this video up until this point, and I want to urge you not to leave just yet, as we still need to look at those trade setups for next week. However, I do want to ask that if you haven't done so yet, please like this video and subscribe to our channel. It would truly mean the world to me. Before we do look at charts, kindly just familiarize yourself with the risk disclosure that is currently on your screen. Now, without further ado, let's get going. So very similar to our review, let's start things off by having a look at the yellow metal, gold. So gold has broken through our support at that 1912 level. Now this was an absolutely key resistance level that has now become support. Should this level be retested and properly rejected, we could see further buying potential on this specific instrument, all the way up to those highs around that 1980 level, which is our next primary resistance. Just as a word of caution, As per the RSI, gold is currently overbought. So during the early parts of next week, we might see a little bit of a retracement before that buying momentum starts to kick in. Nasdaq 100 is also showing immense bullish momentum. All I'll be waiting for on this specific pair is a slight pullback back to our EMAs, preferably seeing a rejection on our 21 EMA, which is that one in the middle, as my primary EMAs are 8, 21 and 50. So seeing a rejection on that 21 EMA and then a close above the 8 EMA, then looking for buyers all the way up to that next primary resistance level around that 11,900 price point. Finally, finishing things off with Euro USD. Now, as you can see here, Euro USD is approaching the very peak of that daily channel. Now, if we do get a rejection around that 1.09 level, we could see a slight pullback on this specific pair back down to that previous primary support of 1.07. Should this channel, however, be broken, as well as that primary resistance at 1.1, then we can absolutely, during this week, look for additional buying opportunities. So traders, that is it from me for this week. I trust that you found this video beneficial. Again, I'm going to ask that if you haven't done so yet, to please like this video, share your comments about the content that we have shared here as well, and subscribe to our channel. Other than that, I will see you all next week, and as always, may the plus be with you. Cheers.